Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market. This podcast is brought to you by Parag Kundalwal, founder and CEO of Consulta, a Dubai-based real estate consulting and global capital advisory firm.
And this is episode 28, our 2026 market forecast and investment strategy. As we look ahead, Daniel, Dubai's property market is entering a new phase. It's less about the explosive boom we've seen and more about quiet confidence and maturation.
That's a great way to put it. It feels like the market is growing up. And the biggest factor defining this new phase has to be the supply pipeline. The numbers are staggering.
They really are. We're expecting approximately 120,000 properties to be handed over in 2026 alone, with a projected 200,000 to 300,000 new units between 2026 and 2028. This will fundamentally reshape market dynamics.
And it's not an even spread, is it? The bulk of these new deliveries will be apartments.
Exactly. Villa and townhouse supply remains relatively limited. This means we have to view Dubai as a collection of submarkets, moving at different speeds. High-density apartment areas might face some price pressure, while well-planned villa communities should remain very resilient.
So, what does this mean for prices? Some analysts, including Fitch and Moody's, are anticipating a potential price correction of 10 to 15%, particularly in that mid-market apartment segment.
That's true, and it's a direct result of that new supply wave. However, the consensus is moderation, not a crash. The market isn't expected to collapse. We're looking at prime property growing around 3%, while mainstream properties might see about 1% growth. Luxury villas in places like Palm Jumeirah and Dubai Hills will likely stay strong due to limited supply and high demand.
Let's shift to the major catalysts driving growth. Two huge infrastructure projects come to mind.
Absolutely. First, the Dubai Metro Blue Line. It's scheduled to open in 2029, but we expect it to be about 30% complete by the end of 2026. This 30-kilometre line will connect key residential and economic hubs. Areas near the new stations could see property values appreciate by 10 to 25%.
And which areas are set to benefit most from that?
Look towards Dubai Creek Harbour, Academic City, International City, Silicon Oasis, Jumeirah Village Circle, and Al Furjan, to name a few.
And the second catalyst is the Maktoum International Airport expansion. We're talking about making it the world's largest aviation hub.
Yes, with capacity for 260 million passengers annually. This is a massive undertaking that will drive significant housing demand in the surrounding areas, most notably Dubai South.
So, with these dynamics in mind, where should strategic investors be looking in 2026?
Dubai South is a clear one, offering high rental yield and analysts projecting 35 to 45% long-term price appreciation. Dubai Creek Harbour, or Downtown 2.0, offers solid ROI with its waterfront views. And of course, JVC continues to be a favourite for its moderate entry prices and strong rental yields of 7 to 8%.
What about the off-plan market? It's always a hot topic.
It remains popular due to flexible payment plans and potentially lower prices. However, investors must be cautious. Construction delays are a real risk due to labour shortages and financing issues. Thorough due diligence on a developer's track record is non-negotiable.
Right. And despite concerns about oversupply, there are powerful demand drivers supporting the market.
Definitely. Dubai's population is projected to surpass 3.9 million by 2028, with a long-term goal of 7.8 million by 2040. The Golden Visa continues to attract global talent and investors, and Dubai's rental returns averaging 6 to 8%, remain among the best in the world.
So pulling it all together, what's the recommended strategic approach for 2026?
The focus should be on real value and quality, not speculation. Take a longer-term perspective. Target communities with proven, consistent tenant demand. We often suggest a balanced portfolio, perhaps 60 to 70% in mid-market properties for steady cash flow, and 30 to 40% in luxury properties for capital appreciation and stability.
In conclusion, the 2026 Dubai real estate market presents a more nuanced, mature landscape. While the supply increase will moderate price growth in some segments, the fundamentals remain incredibly strong.
Exactly. Success will favor informed, strategic investors who focus on location, quality, and long-term value. For expert guidance tailored to your investment goals, you can contact Parag Kundalwal at Consulta. You can find him by searching Parag Kundalwal on LinkedIn, on the web at consultadxb.com, or by phone at +9 71 58 596 4631.
Dubai Daily is here for you, Monday to Friday, to keep you ahead of the market. Thanks for tuning in.